Hello people, very good to all of you. So guys, we started with a new topic in the last class, which is accounting procedure, wherein we are going to learn and understand what is the rules of debit and credit. Guys, as I said you very clear in the last class, this chapter is very important, as this chapter is going to set a very strong base for all the chapters that you're going to do in the rest of your 11th standard, in your entire 12th standard, and thereon, as long as you're pursuing your accounting career. Till that stage, this chapter is going to act as a very strong and important base. Are you able to follow? So guys, let's quickly have a recap of what we understood so far. So guys, we learned that accounting is a systematic process, because if we don't have a system in place, everybody will do the accounting as they feel like. And for a given set of a problem, for a given set of question, people will have a different result. Result here means profit and loss and financial position. So everybody will have a different answer. So to ensure a uniformity, so government said that it is very important that everybody has to follow a set of uniform rules so that you get the uniform results. So for that, the system has been decided. So it says that for you to do accounting, you have to identify a business financial transaction. Transaction is an event or activity that happens between two or more people, where this transaction has to be measured in terms of money. And this has to happen in the course of business. If I go and have, let's suppose, a popcorn in the movie theater, so that is also a transaction which involves money. But is it related to my business? No. So that is a personal financial transaction. So we need to segregate the transaction. Only the business financial transaction will be picked up and that will be recorded. So identify a business financial transaction, measure in terms of money, because everything in accountancy we have to write in the value wise number system, right? So you have to measure in terms of money. Then we have to record. The practical step begins with recording, and the recording happens through journal entry. So journal is a place where all the transactions are recorded together, right? When you do the recording, when you do the journal, you have to take care of two things. One, every recording or every transaction that is recorded has to be supported by your evidence. So if you're recording a purchase transaction, it has to be supported with the purchase bill. If you're recording a sale transaction, it has to be supported by a sale bill. If you are, let's suppose, doing a purchase return or a sale return, it should be attached with a debit note and credit note. What is debit note, credit note? You learn in the next chapter. If you are doing, let's suppose, payment, then there has to be, there has to be a payment voucher. If you're receiving the money, there has to be a receipt voucher. If you're buying a stationery, there has to be a stationery bill. So every transaction, you name a transaction, it has to have a evidence. So 99% all the transactions will have evidence. Just 1% of transaction, those transactions which are in the nature of adjustment, those will not have any evidence. So what is adjustment transaction? What is adjustment entry? That is something you learn in the later chapters. Having recorded the transaction in journal, you have to then post it to ledger. Why? Because in the journal, all the transactions are put together in one place. So it becomes clumsy. So if I want to know what is my total purchase, I'll not be able to know, because everything is put in one place. So we have to pick and choose those transactions which are same or similar in nature, and we have to transfer it to the respective accounts. So purchase transactions, you will take it and put it in the purchase account. Sales transaction, you will take it and put in sales account. The reason of segregating is this, because in the ledger, once you segregate it, you will do the total. Account means what? To count. So we are shifting the transaction from journal to ledger for counting purpose. So that overall I'll get to know that in a year, how much is the total purchase? How much is the total sales? How much is the total purchase return? How much is the total sales return? How much is the total stationery expenses? How much is the total cash balance? How much is the total bank balance? So if I want to know the total of each and every account, then probably I have to prepare it in the separate ledger format, right? So from ledger, you will then shift all the transactions to your trial balance, trading and P&L. So that is a different part, right? So that I'll not be discussing. So till this we have discussed. And journal, guys, journal is also called as book of original entry. If you remember, we have done this here. Journal is called as book of original entry because accounting begins with journal. The practical aspect of accounting begins with journal. So can I say that is the origin point? The origin of recording is journal. So that is why it is alternatively called as book of original entry. Am I clear or not clear? Am I clear or not clear?
Yes, sir.
So we learned account. Account is in T-shaped format. Left hand side of the account is being represented by the word debit, and the right hand side is
Credit.
So the abbreviated form of debit is DR, right? So how did we get the abbreviation DR? From the Latin word, debere, and credit word we got credere. Italian word, Latin word, right? So this concept of debit and credit is being given by Sir Luca di Pacioli, right? Luca di Pacioli, who's also called as father of accounting. He's an Italian mathematician. So he has given this concept, or I can say rather the system of accounting, which is called as double entry system of accounting. In the beginning, we learned accounting is a systematic process. So which system are we referring here? We are referring to double entry system. Double entry system means what? Every transaction will have two-fold impact. In that, one will be debit, another will be credit. For example, if I do a cash sale, so in a cash sale, this is transaction having two accounts. One is cash account, another is sale account. See that one will always be debit, another will always be credit. So which will be debit, which will be credit? That is something you will understand or get to know when we understand the rule of debit and credit. So how do we get to know the rule of debit and credit? There are two rules that has been prescribed. One is called as traditional classification. Which in other words is also called as golden rule of accounting. This is very famous, guys. This is very famous. In the matriculation and the state board book, you will find out this language, golden rule. In CBSE, they call it as traditional classification. Both are same. So they may ask you MCQ question. Another name for traditional classification is golden rule accounting. And the second rule of debit and credit is modern classification. So as I said, the next two classes will be focusing on understanding what is the traditional classification. We'll do a couple of questions based on that. And then we'll understand the another method, right? So as per the traditional classification, guys, but before that, before I go forward in that, tell me something. What is the primary motive of preparing the accounts? First one, to ascertain financial performance. Financial performance means profit and loss. Financial performance, which is nothing but profit bar loss. Financial performance is also called as financial result. As a student, guys, what is the result that you get? Can I say in form of a report card? Hello? So as a student, you work, throughout the year, you give exams. So finally, your result should be good. That is the expectation with which you prepare, right? So result for you, that is report card. Here the result is not only trading and P&L account, it is trading and P&L put together, which we call as financial statement. I'll tell you what it is. So to ascertain the financial performance or result, that is to know the profit and loss, we prepare trading and P&L account. Second, we prepare the accounts to ascertain the financial position, which is prepared using a statement called as balance sheet. In the trading and P&L account, we capture all the informations pertaining to, or we capture all the informations or accounts pertaining to income, gain, and expense, loss. In balance sheet, we capture all the accounts which is the nature of assets
and
liabilities. Liabilities means under liabilities you have capital now, because under liability you have internal liability and external liability. So internal liability means obviously capital. Now these both documents put together, these two documents put together is known as financial statement. For a business, for a businessman, for a business, the report card, here it is termed as a financial statement. The report card, what you get, which has got your results, that is called as a normal report card, annual report card. That is how you say it, right? For here, the businessman, for businessman, the annual report card is termed, it's given a new name called as a financial statement. So financial statement comprises of two documents. One is trading and P&L account. Second is balance sheet. These both put together is called as financial statement. This is called as financial statement. You'll forget this now? Not forget. Okay. So ultimately, guys, you take any transactions, you take any account, either it will be income, that is income gain, or expense loss, assets or liabilities. The four quadrants what we did in the last class. Anything you take, you'll be able to classify under any of these four categories. So this is first is trading P&L. So this is expense bar loss, income bar gain. Here it is liabilities and assets. So any account you take, any transaction you take, you will be able to successfully classify in any one of these four categories. Are you able to follow? Now, based on this, the rule has been drafted, which is traditional approach. Traditional approach says that we are giving three different names. We are giving three different names. Traditional approach says that, which was also known as golden rule, which is also known as golden rule of accounting. So they have given three classification. Any account you'll be able to classify as either personal, real, or nominal. Personal account, real account, nominal account. Now, this three is again based on these four quadrants. So I'll go with nominal first. Nominal account says that if any account or any transaction, if you have or if you carry the flavor of income, gain, expense and loss, you guys come to me. There are a lot of people standing in the queue, right? If among the people those who are standing outside, we are making an announcement that all the accounts those who are standing there, all the transactions those who are standing there, if your income, if your gain, if your expense and loss, please raise your hands and come to me. Come to me. Come to whom? Nominal account. So all the accounts which are in the nature of income, expense, gain, loss will rush and go towards the nominal account. Income, gain, and expense, loss. So once they come and assemble in front of the nominal account. So nominal account says that the rule that you will follow is, debit all expenses and losses. So if you are an expense, debit yourself. If you are a loss, debit yourself. So you have to wear jersey. Which jersey? Debit jersey. Now this is like a game. You have segregated the team. Now within the team also you have segregation. If you are expense and loss, then what is another name for jersey? What do you call it? Uniform? Bib? Bib is for baby, man. Jersey is another name, bib? Okay. So all those who are in the nature of expense and loss, you have to carry and wear, you know, what is that? A t-shirt, or you can say a common jersey by name debit. And all those who are the nature of income and gain, you will be crediting yourself. So credit all income and gain. So if you are income and gain, you will be crediting yourself. Let's take an example. I'm doing a cash sale, or let's suppose business example I'm giving you. Example, business sold goods worth rupees 10,000, goods worth rupees 10,000 to Ram on cash basis. On cash basis. Are you clear with the question? We are doing accounting from whose point of view? Business point of view. So business sold goods worth rupees 10,000 to Ram on cash basis. So can I say this is a transaction? because this is a transaction happening between business and Ram. It is happening between two people. So it is a transaction. Can I say this involves money or money's worth? It has to be involving money or money's worth. It is not necessary whether the money is paid immediately or later. That doesn't matter. If a transaction has got a monetary value attached to it, then it is a financial transaction. Second point is over. Third point, it is happening in the course of business. So can I say that this is a business financial transaction? So identify a business financial transaction and you've measured in terms of money. Next, you have to do the recording through journal. For you to do the journal, I told you two things. One, you have to have the evidence. So can I say the evidence for this will be the sale bill? The evidence for this will be the sale bill. Second is you have to follow the accounting rule and regulation. So you are supposed to follow a rule. You are supposed to follow a rule to do the accounting. To do debit, to do credit, you have to follow the rule. For that, the first step is to follow any rule. The first step is out of the given transaction, you have to identify minimum 2 accounts. So this is a transaction, guys. Please tell me which are the 2 accounts getting affected here. So somebody says cash. Ram account. Yes. 1 cash, 1 Ram. Sales 3. So 3 account. I told you 2 account, but people have given me 3 account. Online people, what do you say? I'm telling you in this transaction, you have to pick and choose 2 accounts, which is getting affected. You can give your point. What is your point?
So the 2 transactions are business sold, which is sales account.
Yeah.
Cash account.
Okay. Bhavyan says, sir, sales and cash. Same. Why did you say Ram? My question to all those people, those who said Ram. So let me come in order. So some people tell me that, sir, business is one account that is getting affected. How come it is possible? Because you are doing accounting in the business. So in the business, will you capture business name? No. I'm telling that people normally, if I ask people normally now, people tell that so business is one account. So all I'm trying to tell is that you are doing accounting for the business. In the business books of accounts, in the books of accounts of business, you're doing the entries. So in that, you cannot write the business name. So this will not be an account. Obviously, sale will be in my account. Why? Because we have to capture my income. Correct? No, if I'm doing a sale, it is my income. So I'll capture that. So this is 100% right. Sale is correct, 100% right. Some people say that, sir, goods is another account. I told you very clearly in the last class, whenever you do a purchase, whenever you do a sale, so goods is coming in and going on, automatically the purchase and sale transaction will take care of the stock. Along with that, at the end of the year, for recording or capturing the stock, we'll pass an adjustment entry. So as long as goods is concerned, you will not record the stock when you're recording the purchase and sale. At the end, you will record in form of an adjustment entry. What is that adjustment entry? You'll get to know only in the final accounts chapter. So goods you will never record. Goods will never be captured now when the transaction is taking place. Instead, it will be captured at the end of the year in form of an adjustment entry. In form of a adjustment entry. So goods will not be captured. Second, Ram. Ram will not be captured for the simple reason because Ram has given me the money. If he is given me the money, do I need to remember his name? Just imagine, I'm running a departmental store. From morning till evening, thousands of people come in the departmental store. They will give money and only buy the goods, no? Because their credit system is not allowed. Unless and until you are a provision store where you're running on the wholesale basis, there the credit works. But a retail departmental store, do you expect anybody to give credit? So he will give the goods only if you pay the money. So like that 1,000 people come and go, guys. Is it practically possible for me to remember all the people name? And what is the necessity for me to remember the name? They have given me the payment, boss. I need to remember the name only when I've sold the goods on credit. I need to remember his name because he has to pay me the money. In this case, Ram has already paid the money. So there is no point in opening the Ram account. Last but not the least, cash. Because if I keep on doing sale on cash basis, my cash balance, my cash in hand will increase. So here the 2 accounts that is going to affect us, sale and cash. Sale and cash. Now guys, so first step is guys, identification of the 2 accounts. Any doubts here? For a given transaction, you identify it as a business financial transaction. You measure it in terms of money. After that, what is the step? With the given transaction, you have to identify minimum 2 accounts. In some cases, in some transaction, you'll have 3 accounts. That we'll discuss later. But now we are at the basic level. So here, minimum and maximum, only 2 accounts we'll be learning today. Am I clear? So the first step is you identified the minimum 2 transactions. Now, these 2 accounts, guys, these 2 accounts, you'll be able to classify in any one of the items in the 4 quadrants. We have 4 quadrants. So sale belongs to which quadrant? Sale belongs to income quadrant. Cash belongs to
Asset.
Cash belongs to asset quadrant. Clear with this? Now come back. Sale is belonging to income quadrant. So for income, you will go to which account? Personal account, real account, or nominal account? If you are income, now you identify yourself as income. If you are income, will you go and take help from personal account, real account, or nominal account? Nominal account, because nominal account is the godfather for us. He says that all my kids, please come here. I will tell you the way. So the nature is income. Cash I have not discussed with you. So I'm just keeping that pending. So if sale is income, so what will you do with sales? Will you debit sales or credit sales? Credit all incomes and gains. So sales account will be credited. And I told you in accounting, every transactions will have 2 aspects. One debit, another credit. So if this is credit, can I say this will be debit? But we don't have to remember in that way. Like, how did we solve sale now? Like for cash also, I'll tell you the step to solve it. But I'm just telling you that if sale is a credit, obviously, other one will be the debit one. Always the thumb rule is that the total of both the accounts should be same. The total of the sale will be 10,000 and this will be 10,000. Because this 10,000 represents the income that I've earned. This 10,000 represents the money that I have in hand. So in a particular transaction, the total of the debit should be equal to the total of credit. This is the double entry system of accounting. Double entry says what? For every transaction, you have to capture 2 aspects. One will be debit, another will be credit. And the total of both the accounts should be same. If it is same, then you're doing the accounting perfect. Are you able to follow? Yes, boss. No, I'll come to all to that. Now I'll take questions from all of you only after I complete it, because I know what all questions you'll ask. So I've prepared everything in advance, and you have a question in your mind that will be there on the whiteboard. Just give me 10 minutes. Just give me 10 minutes. Everything will be sorted. No. No. I'm not taking. Wait. I'm not done. I've not long way to go. Nominal is done. I'll give one more example for nominal. Okay. Tell me. I was about to do that only. Next example is business purchase goods worth 5,000 from Sham. Ram is over, no? Sham. From Sham on cash basis. Is the question clear? On cash basis. So first step, guys, is this a business financial transaction? Yes. First step. Is it a business financial transaction? Yes. Is this transaction having any monetary value? Yes. Third is identify any 2 account. Purchase account, wonderful. Well, offline people are fully charged up. Now we've got the flow. Okay, online people are waiting for responses. Which 2 accounts are affected?
Purchase and cash.
Wonderful. Purchase and cash. Obviously, business will not come. And goods, I tell you, it will not be captured unless and until at the end of the year, in form of adjustment entry, will capture it. How that is, we'll be discussing later. Sham, I don't need to remember his name because we have made the payment to him, boss. So I don't need to remember his name. So the only item remaining is cash. So 2 accounts that is affected is purchase, which will take care of my expense, and cash. If it is not written cash basis, then it is a credit purchase. So that also we'll discuss. So purchase and cash. So purchase, guys, I told you after you identify 2 accounts, the 4th step is you have to tell me that this purchase belongs to which of those 4 items in the quadrant. Purchase belongs to which quadrant? Purchase belongs to expense quadrant and cash belong to asset quadrant. Clear with this point? So the next step is which quadrant it is. So purchase is expense and cash is asset. So I'm just telling steps one by one. 1, 2, 3, 4. Fighting between both of you. Don't worry, I'm there. I'm the referee. I'll tell you everything. Now, guys, purchase is expense. So all those who are expense, my dear children, you come to me. Who says this dialogue? Who says this dialogue? Nominal. So nominal says that all dear my children's expenses, please come to me. So what jersey will you wear? Debit all expenses and losses. Expense will be debited. So if you are expense, debit yourself. If you are expense, debit yourself. If you have done a murder, go hang yourself. Like that it is. Just for fun. Now if expense is debit, opposite party will be always, because Sir Ducati Pacioli says that every transaction will have twofold impact, in which one will be debit, another will be credit. So by that virtue, cash is credit. Double entry system of accounting. Double entry system. System is double entry. Double entry is the system which says that everything should have two impacts, debit, credit. To take care of that, the rule that we follow is traditional, and so rule comes under that. System is outside and rule is making the system follow. Are you able to follow? So this outer circle is the system and the inner circle is the rule. Are you able to follow? So one more thumb rule. So fifth step is identify what is debit and credit. Sixth step is the total of this should be same. If this sixth step you're following, guys, you can never go wrong in an accounting. What is the first step? Identify a business financial transaction. Measure in terms of money. Then identify which two accounts are getting affected in that particular transaction. Once you identify the two transactions, which quadrant it belongs to, identify that. Identification of quadrant. And then once you identify the quadrant, you have to see for that quadrant, what is the rule? So purchase is the expense quadrant. Expense is coming under nominal account. So nominal account says that debit all expense and losses. And the sixth element is the total should be same. The total should be same. So guys, out of these four quadrants, can I say you have a rule for this and you have a rule for this now? We have given a rule for expense and losses. We have given rules for income and gain. What is left now? What is left out now? Asset is left out, liability is left out. Ananya and Niharika, do you agree with me?
Yes, sir.
So for these two people, the rule is yet to be given. So asset is being called by real account. So asset here means what? Land, building, cash, stock, anything. All assets, any assets you name, everything except stock is here. No, how come? Except two people, debtor and bank. So all the assets except two people, debtor and bank, you are not supposed to go to real account, which means all the assets will go where? All the assets will go to real account except debtor and bank. So how does the debtor and bank feel? They'll feel left out, no? They'll feel left out. No? So debtor and bank will be taken care of personal account. So I'll come to that. So real account says that all my dear friends who are assets, please come to me. So all the assets started coming, towards the real account. Then real account says that debtor and bank, stop. You cannot come to my house. You both get out. Naughty people, get out. So real account says that nature, all assets, you can come to real account's house except all assets except two people, which is bank and debtor. Both are asset only. Bank and debtor both are asset, but they are not allowed to follow the real account rule. I'll tell you the logic also. Interest is what? Income or expense. Interest received means income. Interest expense means expense. So both are nominal. Now, real account says the rule that you will follow. All those people those are coming to my home. All those people those are coming to my home. The rule that you will follow is debit what comes in. If you're coming to my house, debit what comes in. If you're going out of my house, credit yourself. Credit what? Wait, don't stop me. Goes out. Let me complete. Credit what goes out. Now, coming back to Ram. Business sold goods worth rupees 10,000 to Ram on cash basis. So we identified two accounts. One is sale, another is cash. Cash is belonging to which quadrant? Asset quadrant. So is this asset allowed to enter the house of real account? Yes, because he is not bank,
Yes.
he's neither debtor. So he's allowed. So what is the rule here? Debit what comes in. If you're coming to my house, debit yourself. So just tell me guys, if you keep on doing the sales, cash will come into the business or not? Cash will keep on coming to me now. If more and more students come, can I say I'll get more and more money coming in? So it is cash coming in. So debit what comes in. So that is where you debited cash. Now let's see the second transaction. Business purchase goods worth 5,000 from Sham on cash basis. So here the two accounts that we identified is one purchase, another cash. So cash here, can I say it belongs to asset quadrant? Here if I keep on purchasing, cash will come inside the business or cash will go out from my hand? Cash will keep on going out. No? I have 10,000 rupees in my hand. I need a purchase. From my hand I have to pay. So cash is going out. So if you're going out, then you have to credit yourself. So credit what goes out. Any difficulties, please? Bank and debtor is not coming under real account. So bank and debtor, if you are a bank and debtor, you are not allowed in nominal account, you are not allowed in real account. The only house that is left is personal account. So now personal account, guys, if you see, liability is pending. So liability will go to personal account, and these both people also will go to personal account. So personal account is a home for all liabilities plus two assets, which is bank and debtor. So all my dear liabilities, all my dear bank and debtor, please come to my house. If these people are not letting you inside, no, my house is open. Come to my house. So what is the rule? If you're coming to my house, what is the rule that you will follow? Debit the receiver, credit the giver. If you're a receiver, if you're receiving something, debit yourself. If you're giving something to somebody, credit yourself. So before I give example for personal and personal account, I'll just quickly run through theoretically what nominal account says. Nominal account says that accounts which relates to expenses, losses, gain and revenue. Revenue means income. Are termed as nominal accounts. So all these quadrants are termed as nominal accounts. Example for these are salary. Salary is expense. Hello? Purchase is expense. Interest paid account. Interest paid. If I have to pay interest, it means it is expense for me. No? When do I have to pay something? If it is expense. So interest paid is expense. Sale is my income. Commission received. If I'm receiving something, commission is my income. So all these are nominal accounts. The net result of all nominal accounts is profit and loss. So if salary, if you keep on paying, can I say expense will increase? If you keep on doing purchases, can I say expense will increase? If I keep on paying interest, see when interest paid I'm talking about, this interest paid has got two components. One is cash component for money paying, another is interest expense component. So here we are discussing about this because this is nominal account. I told you every transaction will have two impact. I'm not talking about this impact. I'm talking about the expense impact. So if I keep on paying interest, can I say my expense will increase in the business? For example, if I've taken loan, I have to pay interest now. So more and more interest, if I pay, my expense will keep on increasing. Now. Sale, if I do more and more sale, income, more sales, more income. I'm receiving more and more commission. Income for, so all these are nominal accounts. So what will be the net result? Income minus expense will give you net profit or net loss. And this net profit and net loss ultimately is getting transferred where? To the capital account. If you remember, when you did the accounting terms, the profit is added to the capital, because ultimately who's going to enjoy the profit? Business owner. So any amount or any transaction happening between the business owner and the business will be routed through capital account. So finally, this has to be transferred to capital account. So what is the rule that we are following? Debit all expenses and losses, credit all incomes and gains. Any problem here? Debit all expenses and losses, credit all incomes and gains. Please repeat with me one time, all of you, even online people. Debit all expense and losses, credit all income and
Incomes
gain.
and gain.
Wonderful. Next, real account. Real accounts are those accounts which relate to tangible or intangible assets of the firm, excluding debtor and excluding bank, both. So all the assets, basically, all the assets except bank and debtor. Example of tangible assets are land, building, investment, plant, machinery, etc. Stock, cash in hand. Intangible asset is goodwill, patent, and trademark. Now, this few things you will know what it is, what is what. For, you know, for example, what is land, you know what is building, what is investment. I would not say all these are example of tangible asset, because investment per se is not a tangible asset, because I cannot touch investment. Here they are given in the flow. Tangible, intangible is a category. Forget tangible, intangible. That's why I told simple language. All the assets except bank and debtor. Because assets does not mean only tangible, intangible. Other than tangible and intangible, also we have assets. Like investment. Investment is it's neither tangible or intangible. It's not coming under that category. It is other than tangible or intangible. Example I'm giving. So here, what is the rule that you will follow? Debit what comes in. If you're coming in, debit yourself. Credit what goes out. If you're going out, credit yourself. Am I clear with what I'm telling? Okay. Now, guys, both these real and nominal account are coming under the category impersonal account. If you look at the structure, guys, this golden rule is classified into two broad structure: personal, impersonal. Under impersonal, you have real and nominal. Now, why I didn't put impersonal is because the golden rule is for personal account, real account, and nominal account. So when they ask you a practical question, they will tell that please classify what will be the golden rule as per the nominal rule, as per the real rule, as per the personal rule. So I did not put impersonal here, but impersonal is just a category. That is, real account and nominal account is something which comes under the impersonal account category. So you may get a question that real account, does it belong to personal account or impersonal account? Impersonal. Nominal account, does it belong to personal account or impersonal account? Impersonal account. So both of them put together is coming under the head impersonal. But for impersonal assets, there is no rule. The rule is there for this, this, and this. That is why I have put these three only here on the whiteboard. Are you able to follow? These are the three accounts for which you have the rule. So we have discussed the impersonal account, guys. Do you have doubts in this? Online people, do you have any doubts in this? Niharika, Ananya, any doubts in this?
No, sir.
Now, what are you left with? Personal account. Now, personal account has got three sub-classification. One is called as natural personal account. Second is artificial personal account. And third is representative personal account. So for all these three, we have a common rule, which is debit the receiver, credit the giver. But now you may ask, sir, what is the need for you to classify into three different types of accounts? Why? Because in liabilities, you may certain times have a natural personal account or you may have an artificial personal account. And representative will come little later. So first, let's discuss about natural personal account. Natural means what? Human being. Creation of God. Creation of God is human being. So can I say there is a natural process? So if you are a human being, then you fall under this category. For example, business purchased goods of rupees 5,000 from Sham. Now cash basis is not mentioned. So which means, can I say we have purchased on credit? We have purchased on credit, correct? So here, can you please tell me which two accounts are going to get affected?
Purchase and
Purchase account, because I need to record my expense, and Sham account, because I need to remember to make him the payment in future. So to remember to make somebody the payment in future, I will create a liability. So can I say Sham is a liability? And more specifically, what is the name of the liability here? Sham technically is called as, really? Debtor is a
Debtor.
customer to whom we have sold the goods on credit. So from debtor, you have to receive the money. I said, Sham is my creditor to whom I have to pay the money, because we have purchased the goods. If I purchase the goods, I have to make the payment to Sham. So this is called as creditor. That is why I've told you from the beginning, please be very careful what is what term. If you're not revising adequately, you will always be confused. Revision is very, very important. So two accounts that is affected is purchase and Sham. So first of all, this is a business financial transaction. Second, can I say there's a monetary value in this? I measured in terms of money. Third is what? I need to classify into any of those four quadrants. That is the step, no? Third, step 3 is what? I need to identify, two accounts. I need to identify two accounts. So identify two accounts. So the two accounts that is identified is purchase and Sham. Once you identify the account, next step is you will classify that this purchase belongs to which quadrant. Next is identify the quadrant. So purchase is belonging to which quadrant, and Sham is belonging to which quadrant. So purchase is belonging to expense quadrant, and Sham is belonging to liability quadrant. What is the fifth step? Once you identify the quadrant, now you have to identify which rule you will follow, which house will you go. So expense will go to nominal account, and liability will go to personal account. Expense going to nominal account. So what does nominal account says that if your expense, debit yourself. Now Sham is liability. Can I say Sham is a human being, which is a creation of God? So you are a natural personal account. If you are a natural personal account, now the rule is debit the receiver, credit the giver. Debit the receiver, credit the giver. Sham, guys, is the receiver of goods or is the giver of goods? He's giving the goods to us because we are buying. So we are receiving and Sham is giving. So credit the giver, debit the receiver. Now receiver and giver from whose point of view? Business point of view. Business point of view doesn't mean, don't get confused that when I talk about receiver, we are not talking about the business being receiver. We are not talking about the business being giver. We are talking from the opposite point of view. From the business point of view, opposite person is receiving or giving. From the business point of view, opposite person is receiving or giving. So for business, can I say Sham is the opposite person? He's the receiver or giver? Giver. So he's the giver. Credit the giver. So Sham will be credited. From business point of view, look what opposite person is doing. Opposite person is receiving or giving. If he's receiving, debit him. If he's giving, credit him. So Sham is the opposite person. He is giving. So credit the giver. So we'll credit him. Is this okay? Now guys, in India, we can do business in multiple forms. Can I say sole proprietorship is one form? Sole proprietorship business is where a single owner runs the business. An individual person runs the business. Second is partnership business. If an individual is not able to manage the business all by himself, he would invite more people to become the owner, and all of them put together will manage the business. So can I say partnership business, multiple owner? Then you have corporates, which is company. Again, multiple owner. Again, you have another system of doing business called as LLP, limited liability partnership. Then you have HUF. Can I say, guys, all these people, all these 5 kinds of business in India, all of them have an individual name. I mean, have a name. For example, Reliance. Have you heard this word, Reliance company? Can I say Reliance is a company? The name is Reliance. This Reliance is called as a person. Who calls this as a person? Law. You know what is law? The rules and regulations that is being framed by the Indian government or government of India is called as law. Law says that, my dear Reliance, which is a company, you are called as a person. Can we call him as a natural person? No, it is an artificial person. Now, why is he artificial person? Because he's been created by law. Natural person is created by God. Artificial is created by law. Artificial person is created by law. Now, why this artificial person is coming into picture? Because when you buy the goods, is it necessary that you buy only from Sham? I am buying goods from Reliance company. That is Reliance Limited. So Reliance Limited is not a human being, boss. But again, you have to remember to pay to Reliance now, because you purchase goods from Reliance on credit. So you have to remember to pay him, yes or no. So here, Reliance Limited becomes an artificial personal account. Why artificial? Because Reliance Limited got the tag person from whom? From law. So he became an artificial person. So why do we call him as a person? Because as a company, you are allowed to buy the property in the company's name and to sell the properties in company's name. In India, to buy and sell the property, to buy an asset, to sell an asset, you should have a name. You should be a person for it. So if the business wants to buy the assets in their name and sell in their name, so it is very important for a business to call himself as a person. So law said that, okay, let's make all the business person, but they are artificial person. So in the business, if you buy and sell goods to any artificial person, then they are called as artificial personal account. That is, I have sold goods to Tata Limited. So Tata Limited is a artificial personal account. Next, paid rupees 5,000 to Reliance Limited in cash. Next transaction, paid 5,000 to Reliance Limited in cash. This is the credit purchase and this is the payment. So in this, guys, first of all, is this a business financial transaction? Purchase has happened in business. Obviously, payment will happen in business now. So this is a business financial transaction, no doubt. Second, can I say it has a monetary value to it? It has a monetary value. Having said that, now please identify which two accounts will get affected. Online people are waiting for responses. Which two accounts will get affected?
Yes, sir.
Cash account and Reliance Limited. So two accounts getting affected, cash account and Reliance Limited. Cashes? You have to pay to the Reliance company now. Okay, let me complete. We'll get an idea. Let me just complete it. Now, guys, you have identified two accounts. So identifying two accounts, cash and Reliance. Now you have to place that they belong to which quadrant. So identify the quadrant. So can I say cash belongs to? So I'll just erase this part. So cash belongs to which quadrant? Reliance Limited belongs to which quadrant? Cash, can I say it belongs to asset quadrant? And Reliance belong to quadrant. Quadrant is liability. Because we have to pay money to Reliance Limited. So we owe money to Reliance Limited. So it is a liability for us. So Reliance Limited is a liability. And more specifically, it is my creditor. So assets will follow which rule? Personal, real or nominal? Assets will go to which house? Assets will go to which house? Real house, real account house. Liabilities will go to which house? Artificial personal account house. Real account says that cash, are you coming in or going out? First tell me. Guys, we are making the payment to Reliance Limited. So from my business, cash is coming in or going out? So cash says, sir, I'm going out. So if you're going out, then credit yourself. Credit what goes out. Debit what comes in, credit what goes out. Credit what goes out. So cash is going out, credit yourself. Now, business is asking Reliance Limited, opposite person. Reliance Limited, are you receiver of the money or are you the giver of the money? Business is asking
Receiver.
opposite person, Reliance Limited, are you receiver of money or giver of money? Receiver of money. So debit the receiver. Debit the receiver. Debit the receiver. Any problem here? Any problem here?
No, sir.
So are you able to understand what is personal account, what is artificial personal account, what is natural personal account? Accounts, personal account means what? Accounts which are related to person, that is individual, firm, company. So individual is a natural personal account. Firm, companies, debtor, creditor, all these are natural or artificial personal accounts. For example, debtor can be both natural or artificial. Debtor, so here, for example, creditor. So Sham is, can I say the natural personal account? Sham is a human being, boss. So it's a natural personal account. He's a creditor, to whom I have to pay the money. Same way, Reliance Limited also is a creditor, but here it is an artificial person. Are you able to follow? So all the accounts which are either natural person or artificial person, you don't go to any other house, you come to my house. So now tell me, guys, we eliminated two people. We eliminated two people from the real account. One was bank and there was debtor. Can I say bank is also artificial person? Bank is one form of doing the business, one form of organization. Axis Bank, ICICI Bank, IndusInd Bank, SBI Bank. Are these natural person? God have created these banks. Who have created? Law has created. So now did you understand why these people were sent to personal account? Because these are artificial personal account. So artificial personal account, you go to the personal account category. Debtor, guys. If debtor is Ram. If debtor is Ram, then Ram is a natural person. So you go to personal account. If debtor is Reliance Limited, Reliance Limited is artificial personal account. Go to personal account. Now, apart from these two guys, we are going to eliminate two more people. Who are those two people? It is surprise. Bank and debtor, you're clear. Apart from these two people, we are going to eliminate two more assets from this category. So totally, how many people are we going to eliminate? 4 people we are going to eliminate from the asset category, from the real account to the personal account. No. Stock is already there. Stock is asset. Inventory is asset. It will stay in real account only. No. I'll tell why. Now, guys, individual firms, companies, debtors or creditors are personal account. Example of personal account are Ram and Co. A customer, Ram and Co. Sole proprietor is always a natural person because, for example, Fortune's Fund Learning Academy, it's a sole proprietorship concern. So it is run by, let's suppose, me. So I'm the single person. So I means FFLA, FFLA means I. So here it represents single person, means natural person account. So FFLA, Ram and Co. If it's an individual concern, if it is a sole proprietorship concern, then you are a natural personal account. If you're a partnership, because partnership needs to be created by law. This FFLA, guys, there is no need for law to be created. One fine morning, if I get up and start a new name, that will be my sole proprietorship concern. I don't have to register in law. Whereas partnership, to give the birth to partnership, you have to register in law. To create a company, you have to register by law. So all the creation happens by law. Therefore, you become an artificial person. So Ram and Co, a customer, debtor, customer. Javeri and Co, supplier, creditor. Capital account, owner. Drawings, all this belongs to the personal account. Debtor, human being. Creditor, human being. Capital account is something related to whom? Owner, no? If anything, if any transaction happened between the business and the owner, if any transaction happening between business and owner, it will be recorded through capital account. Are you able to follow? So that is my personal account. Drawing is my personal account. The main purpose of the personal account is to determine the balance due or what is due to the person, to the organization, or from the person or from the organization. This is all too technical to understand. Keep it very simple. We'll go very, aram se, because a lot of theory if you read, it will be confusing. As in when you do practical question now, all these meanings will be properly understood. Don't think too much. In that, we have three categories, guys. Natural personal account. The term natural person means creation of God. Therefore, the account will include all the individual names such as Ram account, Asha account, Sham account, Ram account. All these are natural personal account. What is artificial personal account? These accounts include accounts of corporate bodies or institutions which are recognized as a person in the business dealing by law. The accounts includes account of corporate bodies. Corporate body means companies, institutions. Bank is an institution which are recognized as a person. Which are recognized as a person. Who is recognizing these people are a person? Law is recognizing. These are all called as artificial personal account. That is an account of a limited company. Limited company means what? Reliance Limited. Reliance. What name did I give? I told Reliance Limited, no? Reliance Limited is a name. So Reliance Limited is a company. Then the account of a club cooperative society. This is another form. Like we have HUF, LLP, partnership like that. Club cooperative society is also one form of doing business, which you will understand in the 12th standard. Are you able to follow? So all these are termed as artificial personal account. Now let me give one more example. Ram, who's the owner? Ram is the owner, business owner. Started business with rupees 1 lakh as capital. Ram, who's the owner, has started the business with rupees 1 lakh as capital. So guys, first of all, is this a business financial transaction? Because Ram is starting the business, boss, so it has to be a business financial transaction, and this involves money's worth, monetary value. So it is a business financial transaction. Third, I need to identify the two accounts. Third step is identification of two accounts. So please tell me, guys, in this, which two accounts will be identified to be recorded?
Ram and capital.
Ram, because I need to remember to repay this money back to Ram in future. So Ram is a liability for me. More specifically, internal liability. And here, cash. So this 1 lakh is coming in what form? Cash or bank? So if it is coming in cash, Ram started business with 1 lakh rupees in cash as capital. Then here the account that will affect is cash account. So Ram may give the money 1 lakh rupees in cash. He may give in check, which is affecting my bank account, or he may give in form of asset. So I need to take care of two things. I need to take care of Ram. Ram automatically means capital. The two accounts that are affected is Ram's capital account. So identify two accounts. In that, one is Ram's capital account. Another is cash account, because Ram is giving money in cash. So when money is coming in cash, should I not record cash? If you don't record cash, money came in. So in my hand, more money is there. But in books, I did not record anything. So can I say there will be a mismatch? You give me 25,000 rupees. Okay, I have 25,000 rupees in my hand. But in account, I forgot to write that. So in book, something else will be there. In hand, something else will be there. Is it right or wrong? Wrong. So like that 1 lakh rupees, business is having money in hand. But if you don't capture that in account, then both will not be same. No? If nothing is specified, only cash. First, Ram's capital. Ram and capital both are same account is my point. Ram and capital are not two separate people. Okay, if you're telling Ram is a different account, capital is a different account, then what is Ram? What is the quadrant? Ram belongs to which quadrant? If you're telling Ram belongs to which quadrant? For business, Ram is a person to whom I have to pay money in future. So Ram is a liability.
Liability.
Capital is which quadrant then? So two
Liability.
Always remember, in a transaction, you can have three permutation and combination. One account will always be something pertaining to trading and P&L. One will always be balance sheet. Trading and P&L means either income, expense, gain, loss, either will be balance sheet. This could be one combination. Second combination will be both are Both are trading and P&L versus trading and P&L. I'm telling you that when you enter a transaction, the two accounts what you identify now, these two accounts can belong to both of these statements individually, or it will belong to both these people. And third option is both will belong to balance sheet. For example, cash paid to Reliance Limited. Cash is asset, Reliance Limited is liability. So example for this is cash paid to Reliance Limited. So cash is asset, Reliance Limited is asset. Sorry, Reliance Limited liability. Example for this is cash sale. Cash is asset, sale is balance sheet. Sorry, cash is asset, balance sheet. Sale is my trading P&L income. So one trading P&L, one balance sheet. One balance sheet, another also balance sheet. Trading and P&L will come when I'm transferring one income from one income account to another income account. When I'm shifting expense from one expense account to another expense account. This you will understand in future. So these are the only three possibilities. You will never see asset versus asset. For example, when I'm seeing balance sheet versus balance sheet, one will always be asset, other will always be liability. You will never see a liability and liability coming into picture. It will come, but the cases will be different. So here, all I'm trying to make you understand is that RAM and capital are not two different accounts. Both are same. RAM's capital account. If I have to give anything to RAM, I will record in this capital account. See, understand one thing. If I just write RAM account now, then RAM is my customer or my owner or whether it's my supplier, how will I know? So with RAM, if you attach the word capital, it will denote that he is the owner. Because who can give capital? Owner. If you just like that write RAM's account, how will I know whether RAM is my customer, whether RAM is my creditor or debtor? Are you able to follow? So RAM's capital account means the moment you attach capital word to the RAM becomes the owner. So RAM's capital account will get affected. And then will be what is he bringing inside the business? Is he bringing money in cash? Is he bringing money in check? Is he bringing assets? I told you, capital can be brought in form of cash or kind. Kind means what? Assets. I can bring laptop. I can bring projector from my home as capital. Are you able to follow? So having identified the two accounts, so tell me which quadrant it belongs to. RAM's capital account belongs to the liability quadrant.
Liability.
Cash belongs to asset quadrant. The liability, please tell me which rule will you follow? Personal account. An asset you will follow? Real account.
Real.
So personal account, guys. Personal account. That is we asking the opposite person. But business, who is the opposite person? Ram. Ram, please tell me. Are you giver of the capital or are you the receiver of the capital? Giver of the capital. So debit the receiver, credit the giver. Debit the receiver. Rule says that debit the receiver, credit the giver. So from business point of view, the opposite person is Ram. So Ram, we are asking Ram, are you the receiver of money? Or are you the giver of money? So Ram says, sir, I'm giving the capital. So I'm the giver of the money. So credit the giver. So Ram's capital account, I will credit. Cash. We're asking cash. Cash, are you coming in or going out? We're asking this question. The security was stopping in front of the real account house. Is stopping the cash and asking, are you coming in or going out? So cash says that, sir, I'm coming to your house. So debit what comes in? Welcome. Debit what comes in? So cash will be debited. Real RC, this will, Ram's capital account will be credited. So one debit, another credit. Okay, not okay. Are you able to follow what and how we have to approach? Online people, comfortable, not comfortable?
Yes, sir.
Now, this is representative personal account. In my class, I will never tell any of you to buy heart. But now I'll tell you to buy heart only for a short period. Because I'll be explaining about the representative personal account in detail when I do the journal entry chapter. Here it says that in representative account, 4 people will come. In representative account, 4 people will come. Or 4 accounts comes into picture. Prepaid expenses, outstanding expenses, accrued income. Income received in advance. At the moment you look at this, can I say you will say that this prepaid is an expense? You will say this is expense? No, this is not expense. The nature of this is in form of either asset or liability. Why? Because this is not pure expense. This is expense prepaid. So with expense and income, if you have a prefix attached in form of prepaid, outstanding, accrued, or income received in advance, in that case, the nature will become either asset or liability. Now, why is that? Or when does that happen? You'll understand conceptually when I do the journal entry topic. Because for all these 4 cases, I'm going to give you a practical example. Are you able to understand? So as of now, that you have to remember is prepaid expenses is asset. Outstanding expenses. Outstanding means what? Pending. Pending expenses, which means expenses are pending to pay, yet to pay. Anything that I'll pay in future is called as liability. This is easy to understand, but prepaid is not that easy to understand. I need to give a proper example to make you understand. No. Accrued income. Accrued ka another name is outstanding. Outstanding means what? Income yet to receive. I am yet to receive. I will receive in future, not paid, receive. So it is asset. Anything that I receive in future is asset. So accrued ka another name is outstanding. Outstanding means what? Pending. Pending income. Pending income means what? Income yet to receive, which means I'll receive in future. So hence it is asset. And income received in advance, liability. So I told you that apart from bank and debtor, 2 more assets are going to be kicked out of the real account house. And those 2 are, this 2 people is going to get kicked out. Prepaid expenses and accrued income. These people are kicked out of the house along with, yes. So please make a note here. All the assets except bank, debtor. I have no space. I'm just putting it here. The third one is prepaid expenses, and 4th one is accrued income. If you don't make a note, you think everything is registered here? Give me 24 hours. Auto erase will happen. You know how our brain has been designed? Depending on how the event is, how strong the event is. If the event is okay-ish, you will not remember it forever. For example, if any accident happens, which is an extreme situation, you'll remember that for a very long time. But when certain normal things happens now, the design of the brain is done in such a way that within 24 hours, it will do auto erase. So whatever you're learning now, which is going to your head, which you're actually thinking that I'll remember forever, trust me, 80% of that will get erased automatically next 24 hours. If you don't want that to get erased in next 24 hours, you have to do revision. So if you do revision, that will stay for next, depending on how or what method you do the revision, it will stay for next 4 or 5 days. Again, after 4 or 5 days, it will erase. 60-70% will erase. So if you want to really again remember it further, again you have to do another revision within a gap of another 10-15 days. So if you follow the revision cycle, only then you'll be able to remember. So for you to do revision, you have to make notes, which you have not made the notes. So what will happen? Everything will go away from your mind. So one point will come after 2 weeks when you have to apply this, but everything is blank. So you will think, oh, should I do that or should I do this? And everything will go blank. I'll just come back to you, Bhavyansh. So guys, I told you that except prepaid expenses and accrued income, bank and debtor, except these 4 people, all the assets will enter the real account and they'll follow the rule of real account. Whereas these 4 people, that is bank, debtor, prepaid expenses and accrued income, they will go and take help from the personal account. So personal account takes care of all liabilities plus 2 assets plus 2 more assets, which is prepaid expenses and accrued income. Prepaid expenses and accrued income. So this is the rule, guys. Now tell me if you have any doubts. So rule here is debit the receiver, credit the giver. Debit the receiver, credit the giver. Any doubts here, please? Bhavyansh. Clarified? What is the doubt, by the way? Okay, that I've answered now. Yeah. So Ananya, Niharika, any confusions?
Sir, so like you said in the real account, all the assets will come except the bank debtor and the one we just
Expenses and
added
accrued
now.
income.
Yeah. So if the debtor is like not the artificial one, like bank,
Yeah.
so is that included in
Debtor
the
means it could be either two things, either artificial person or natural person. Correct, no? So you are telling that if debtor is not artificial person,
Yeah.
then it is he's a natural person.
Yeah. So
Okay,
it's
then
included in the real account or it's all a
still
personal?
no. Debtor, whether you are natural person or artificial person, still the personal account rule will follow because personal account has got three categories now: natural person, artificial person. So both of these natural and artificial person come under the personal account category. No?
Okay. Yeah.
So the debtor means entire debtor, whatever form you are in, whichever form you are in debtor, everything will go to your personal account. So the rule of the personal account will follow. Convinced?
Okay, sir.
Ananya, comfortable?
Sir, how is the income in advance a liability?
Come again.
How is the income in advance a liability?
That's what I said you. These four cases are special cases. This I can only explain you when I come to the journal entry chapter, because in the journal entry chapter we are discussing about this in detail. Where is it?
Okay, sir. Yeah.
I don't know, somewhere it went. Yeah, here it is. These are four special cases which I'll be discussing in the journal entry chapter, because for each one I'll be discussing with example. So when I discuss it with the proper example, it is only at that point of time you'll understand why it is asset and why it is liability. If I take now, it will be too much of burden. I said, there's certain information I'll give you now, certain later. So if you go in organized manner, you'll not feel that much of burden. If today itself, if I tell all the information together, you'll not be able to, take that burden because there's a lot of minute information. So I'm trying to stack it in a proper order, one after the other, in such a way that you don't forget it. So that is why I prefer doing this at the journal entry chapter. Ananya, am I clear with what I'm saying?
Yes, sir.
Okay. So let's quickly summarize, guys. So accounting is a systematic process. So the system we have to follow to have the uniformity of the desired result. The result here means the report card. The report card here means the financial statement. The financial statement here comprises of two documents. One is trading and P&L account. Second is balance sheet. Now the system here refers to the double entry system of accounting. Double entry system of accounting is a system given by Sir Luca di Pacioli, who says that every transaction will have twofold impact. One is debit, another is credit. To identify what is to be debited, to identify what is to be credited, we have to follow the rules of debit and credit. So we have two rules of debit and credit. One is the traditional rule, which is also called as golden rule. Second is the modern rule. Traditional rule says that any account you'll be able to classify into three categories: personal, real, nominal. Nominal means all the accounts which are in the nature of income, gain, expenses, losses. You will look up to the nominal account rule. The nominal account rule says that debit all expense and losses. Debit all expense and losses, credit all income and gain. If you are a expense, debit yourself. If you are a loss, debit yourself. If you are an income, credit yourself. If you are a gain, you credit yourself. Then comes the real account. Real account says that all assets except four people. One is bank, second is debtor, third is prepaid expenses, fourth is accrued income, or you can say outstanding income. So except these four people, you can come to my house, and the rule that you have to follow in my house is debit what comes in, credit what goes out. Debit if you're coming in, credit yourself if you're going out. Then finally, you have personal account. Personal account has got further three sub classification: natural personal account, artificial personal account, and representative personal account. So natural personal account is for God's creation, human being. Artificial person is created by law. And representative personal account are those 4 special cases. So all these guys will be in the nature of liabilities. Plus these 4 cases, these 4 items I would rather say, which is bank, debtor, prepaid expenses, for accrued income, or you can say outstanding income. Because if you are excluded from that, somewhere you have to be included, na boss? So you are getting included in the personal account family. So personal account says what rule? Debit the receiver, credit the giver. Now who is the receiver and giver here? Not the business. Business says opposite person. You tell me, are you receiver or giver? So opposite person is receiver means debit him, giver means credit him. That's all guys. This is traditional accounting. So based on this, we'll do a couple of questions. With that, you should understand how do we solve the question using the traditional method. Now with this guys, your understanding should not be more than 25%. Today, whatever you've learned, your understanding, if it is 25%, I'll be happy. Why? Because the next 25% will understand when I do more and more questions from this chapter. The next 25% will understand when I do the journal entry chapter. And then next 25% will understand when I do the remaining level. I mean, when I say 25%, I'm telling the grip, the hold on the subject, the hold on the concept. It takes time because as you go forward, a lot of new things will get added. So your learning gets over by only end of level. I mean, to the extent of rules of debit and credit. Are you able to follow? So if you're 25% clear, just give me heads up. 25% only, not more than that. Comfortable? So like, no sir, I'm 25% less than 25%. This is 10%. Sir. Fine, let it be 10%. I will take off your remaining 15% in next class. I'm telling you guys, we just started. We have only discussed the rule. We have not done the practical questions. Now imagine more and more practical questions. Your mind will get even more widespread. Things will start, getting stacked in a very orderly manner. Are you able to follow? So don't have to panic. We have long way to go. What are we going to do till Feb? Do this only. What else? What other things are going to do? Online people, comfortable, not comfortable?
Yes, sir.
Yes, sir.
Yes, people. So my humble request to all of you is that please do adequate revision. Did I discuss with you the revision structure and revision pattern? I'll quickly late okay? No. Guys, whenever you do the first revision, beat any subject, doesn't matter. First revision should happen within first 12 hours of learning. If you learn something new, revise that within 12 hours. So you've learned something new today, within 12 hours. Let's say today night or tomorrow morning before you do something else. Best part is tomorrow morning, the next day morning. When the mind is fresh, that time if you recap, everything will be superbly arranged. Everything will get superbly revamped. And when you do the revision, it is not necessary that you have to do for hours together. The revision can go anywhere between the range of 15 minutes to 30 minutes max, more than sufficient. In that, if you want to read, recollect, note down, work out, whatever possible, you have to do it. So this is the first revision. So for example, today is what? Tuesday. So whatever you learned on Tuesday, Wednesday morning, you will study. Whatever you learned on Wednesday, Thursday morning. Whatever you learned Thursday, Friday morning. Is the revision, first revision clear? Second revision. Second revision, guys, should take place on week end. So whatever you studied on Monday to Saturday, or whatever you studied between Monday to Saturday, you would have done the first revision, Monday ka Tuesday, Tuesday ka Wednesday, Wednesday ka Thursday, Thursday ka Friday, Friday ka Saturday. Whatever you studied here, you have to revise on Sunday. The entire week's revision has to happen on Sunday. This you should take, somewhere in the range of 45 minutes to 1 hour maximum. 45 minutes to 1 hour, because entire week's revision now, so it'll take 1 hour. Maybe you can glance, maybe sometime little bit workout also you can do. This 45 minutes to 1 hour more than sufficient, not required more than that. This is second revision. Third revision. Now, third revision depends on what kind of a person you are. When I say person means what kind of a memory power you carry. Now, everybody's memory capacity is different. Do you agree with me? So some people's memory capacity is below average. It is below average. So which means you are a person who is not able to recollect things very frequently. But whatever you're studying goes into your mind, then you forget it. So retention and recollection. Retention means what? Maintaining it throughout the week, and recollecting whenever you think about it. So retention is different, recollecting is different. So these kind of people cannot retain and recollect for a long time. So once you do the revision on Sunday when you do the revision, immediately the next Sunday, within a gap of 1 week, you have to do the revision, third revision. If you are a below average person, when I say below average means from memory point of view. So let's suppose you're an average person. You have average decent memory. Then you don't have to do the revision next Sunday. Give a gap of 1 week and do the next Sunday revision. So next revision will be next to next Sunday. So can I say next to next Sunday means you're giving a gap of 2 weeks. So after 15 days, you're doing the third revision. Let's suppose your memory power is above average. In that case, you can do a revision next to next Sunday, which means you can effectively give a gap of 3 weeks to 4 weeks maximum. 3 to 4 weeks maximum gap you can do. Now, some people are like super brain, intelligent to next level. Those are people, if they study once, for next 2-3 months, they'll not forget. If you're in that category, then give the third revision after a gap of 2-3 months. I don't know. I don't belong to that level at all. I'm nowhere near to that. So I can relate myself to somewhere this category. So you have to be true and honest to yourself. Right? Be true to yourself, which category you belong. What is your memory and retention power? Depending on that, if you follow this, trust me, I'm telling you, you will have a very comfortable, remembrance or recollection during the exam. Or when you prepare for your exams also, no? Even that point of time, you will not have the difficulties. So people, when they don't follow the revision pattern, what happens? When they see it 1 or 2 days before exam and test, when they try to recollect, a lot of information. To study this or to study that, that is a challenge. In that, to remember what is important, not to remember everything is a challenge. So everything becomes a kitchen. So eventually that will reflect on the performances during your exam and test, which will eventually be bad. So if you don't want to go through that phase, this is very important. I've got the feedback from 11th and 12th people of your seniors. They've given me the feedback that this methodology is helping them out. It is working for them. And I got this feedback as well from the people, those who are doing CA Foundation Inter and Final, because I myself have followed this in the CA Final. So for me, it gave a result. That's why I suggested people. So all the students at the different level, they told me, sir, this is an excellent, way of, studying and revising things to retain and recollect during the exam. So even they have followed this and they've got the results. So whatever I'm suggesting is just not out of, somewhere I'm just suggesting. This is proper trial and tested method where hundreds of people have followed this and they've got the results. So that is why I'm telling that if you follow a similar revision pattern, you'll be very, 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 very comfortable. I'm telling you, try this once and see. And try the way you are studying. Compare both. In which you're getting result, follow that. What else you do? Right? So it is already 8:40, guys. Let me not take more time. So online people, do you have any doubts in whatever I said just now?
No, sir.
No, sir.
Wonderful. Offline people? No doubts. Offline people, sir, if you finish, we just want to go. Right? So on that positive note, guys, I put an end to today's session. I'll see you all in the next class, which is on Thursday from 7 to 8:30. Until then, bye-bye. See you. Take care.